trading before you ever click that mouse, because the average trader struggles to get results. And that's why we come here week after week to share these tips with you to help you be on that right side. And so joining me today are Jeff Smith and Marquet Latimer. We're so glad to have them back with us. And Jeff, he's been trading for a long time. He's been trading since he was 17. Started out his career life as a mechanical engineer. He trades stocks, he trades options, he trades bonds, futures, you name it, he does it all. He is the co-creator of the Roadmap software. We love that software, very intuitive in the market. And basically, Jeff is he's like this walking encyclopedia. Anything and everything you want to know about the markets, you can ask Jeff, and he has great answers on that. He's got award-winning education. I'm one of the benefactors of that great education, so thank you, Jeff, for that. And then welcome back to Marquet. Marquet, we're glad you're with us. And this girl, she turned 2,000 into 2 million in 2 years. I mean, that's an amazing feat. And so really somebody you really want to listen to. Whenever they can do that, that's phenomenal. And you know what? Her number one plan is she's got this great retirement pattern plan. I can't wait for you to hear a little bit about that. And the thing about her is she's got extraordinary determination, and she knows better than anybody that Wall Street doesn't know anything more than you do. So she just knows how to apply it. She's going to help us see how to apply it with volatility. She's helped thousands do this. So you're in good hands with Marquet. So we're excited to get started. So Jeff and Marquet, hey, I want to ask you first, Jeff, in general, what causes this volatility? And are there some things that we could do to kind of foreknow that it's coming? What do you think about all that?
Well, there's quite a few things that actually cause volatility. I think in our current market that we're looking at now, you actually have two different things occurring. One is there's a lot of news out there, not necessarily scheduled economic news, which that does move the market around some, especially with the job creations and deletions and all that good stuff. But you also have news is kind of like the COVID thing, whatever anybody throws out overnight or during the day, that's going to move the market as well. And it's more of a fear thing more than anything, just because people don't know what the forthcoming economy is going to be looking like. And that's where a lot of the volatility comes in. They're trying to guess what it's going to be. Is it going to be good? Is it going to be bad? Another thing that you've been seeing, and I don't know if people really keep track of it, the institutional buyers that are out there really aren't there. They're not playing in this market much. And so you have a lot of the little guys out there playing in it. So you've got a decreased amount of volume a little bit. And with that, you get more movement because, the bid and asks aren't that big. And so you'll see a lot of that happening. But I think most of it is just uncertain news, and you can kind of go from there. One thing I like kind of doing in markets like this, because of the volatility, what happens to option premium, it goes up. And that's the wonderful thing, because you can go out there and start selling puts or selling put spreads or whatever it may be. And I know Marquet and I've actually talked about this a little bit a while back. But I like going out and selling naked puts. If I get a little worried, I can just buy a put to kind of help along with that, so I can make money on it and try to keep the premium. But I like to go out and sell naked puts because I can pull in a lot of premium, and therefore I can reduce my risk on the stock if they assign it to. Otherwise, I just get to keep the premium itself. I don't like doing naked calls very much, just because the market has more of a tendency of going up than going down. But if we get into a bear market, I don't have a problem with that. But right now, we just made new all-time highs in the S&P. So what the heck? Stay on the bull side of things. And kind of like what you like to do, Celeste, you like to have that come back down, right, into wholesale and try to scoop some of those stocks up as they go back up to retail. So, but I do like doing those kind of things in these markets, just because A, it's fun, but B, you can also make money doing it. So the challenge is out there to see who's right and who's wrong. And sometimes I'm wrong, I admit. But anyway, it's I like volatile markets just because of the option premiums, and you can play around with them a whole lot.
Well, a question for you, Jeff, in that, what do you do to help you have calm in these volatile markets? When you're in the midst of it, what are you looking at? What are you doing? What are you watching to give you calm in the midst of it?
Well, as you mentioned earlier, we have our Roadmap software. And we've got you can make roadmap as complicated as you want, or you can make it as watered down as you want as well. There's some things in there that I kind of keep an eye on. One of them is called a thirds page. And what it does is it takes whatever instrument you want to throw in there, and it looks at the previous day's range, but also I like to look at a 30-day range. So it'll be like a 30-day bar. And it divides that bar up into 3 thirds. So if we're in the top third of that range, or the middle third of that range, or the lower third of that range. And so when I see big down days or big up days, I always go to that page and sit back and go, okay, how bad it was going down, And even with the big dip that we had, when was that? At the very beginning of the month, we went down to 44.85, wasn't it? I believe it was in the S&P, something like that. But even on something like that, if you look at the past 30 days, we came down into a neutral zone. Everybody was saying bear, 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 and I'm like, no, neutral, neutral, neutral. And so that's one thing that I like to look at, is just to kind of keep my eye on the forest as opposed to a couple of trees here and there. And one thing that I've been kind of worried about this market, though, is you don't have stocks backing up the index, if you will. You have the big stocks, the large market cap stocks pushing the index higher, but the other stocks in there going, there's no enthusiasm. And so with that, I get a little leery of how far up we can actually go. Unless we can get some enthusiasm in buying all 30 Dow stocks as opposed to 5 or 6 of them, then, that's the one thing I always kind of keep an eye on, is just how that's balanced out in those indexes of what are they buying and what are they not buying. So that you can, this market is going to probably remain volatile. Now, we're in a time of year, it's going to probably slow down a little bit. People are going to go on vacation, or their kids are getting out of school next week, right? And so they're going to be kind of pulling themselves away from the market. So you're not going to see that much volume coming into this thing. That's not unusual. One thing I like to do is take the last week of the year off every year, just because I don't like trading during that week, just because it's chewy, choppy. And it's actually a little bit on the weak side overall, but not always. So that's one thing I always kind of look at this time of year. I go into the end of the year cautious. I don't load my boat and say giddy up, see what happens next year. I like to let the market just be the market, and I always like the last week and the first week of the year, or the last week and the first week of the year, are usually the ones that I just kind of leave alone. Just because the first week of the year, you don't have any idea how the year's going to go. It's too young. Little baby New Year's is out there, right? He doesn't have a beard yet. So, but that's the thing. I would like to give him that first week, and then we start figuring out, hey, is this thing going to move up, or is this thing going to start moving down?
Great, excellent. Well, a lot of excellent insight already right now on volatility and trading different times of the year, things that Jeff is looking at. Hey, Mark, what kind of things do you look at to, how do you approach this volatility? Do you have clues that's bringing you into this volatility? Do you scan for opportunities? What do you do even to avoid the pitfalls of the volatility? Getting in late, getting out early. What kind of things do you do? How do you look at it?
Yeah, this is so lots of things. So to me, a lot of this comes down to charting, and Jeff is absolutely right. You get some weird stuff at the end of the year. I think volume lightens up, and nobody wants to really work, want to take a break. But for the volatile times, to me, it's all about reading that chart, and that chart will help you find where stocks are turning, where they're not. Real quickly, when I was a new trader, I was just struggling. I would make a little bit of money, I would lose a little bit of money, and I wasn't getting anywhere. I was just, spinning my wheels. And it was a friend of mine that I had met that was a really successful trader. He said, you got to learn to read the chart. And if you do it, it'll make all the difference. And that's what really set me on that path to take that 2,000 to 2 million. And it's what I've made mistakes, which we all do as traders. I go back and I look at the charts, and I can learn from those. And I'll tell you what, the answer is almost always in the chart of how to take advantage of these movements and the volatility. Do you guys mind? Is this a good time for me to take over and just show you some?
Yeah, that would be great. Excellent. Go ahead, take it over.
Oh, I was let's do a screen share that because I got some slides to show you a little bit, teach you some of this, and then share actual charts with you. So super excited. And by the way, thanks for having me join you guys. I love this. This is so fun. Just have to find the right screen to share. So here we go. All right, so we've got some charts here.
Perfect.
And yeah, and I mean, I'll start right here with the spiders. I love looking at the spiders just as a big overall gauge of what the markets are doing, and they're also really great to trade. So you can see even just on this chart, there's a lot of volatility as we've headed here toward the end of the year. And as we get into next year, I would expect we'll still have these big swings. There's a lot going on economically and, from Washington, D.C., and then inflation and the economic reports, and then the earnings reports that are going to come out early next year. There's just a lot, which to me is just all potential. It's all opportunity in the market, right? So let me show you this. I'll jump over here and I'll show you a couple of slides that I put together and had some help with some great people here to show you a little bit about how this works, right? So charts, I think, again, as I mentioned, it's the most critical thing when you're in a choppy market. I really do believe it's what will give you the answers. It's absolutely been the key to my success. It's made all the difference in the world. And, and I teach all over out of the U.S. and Dublin and all these, fun events. But I love to teach people how to chart. It made a significant difference for me, and I love to share it. So, trading can be a little bit solitary, so it's so great when we have these groups of traders like this group to get together and hang out and chat with. I love that exchanging of ideas. I think it keeps everybody sharp and better. So when we're looking at things like, forecasting the markets, anticipating major shifts in stocks, and even identifying some potential trades, like things like that. If it sounds like something that you guys would like to have, let me know, and then I'll walk you through these patterns that you need. And I think I don't know, you guys, sounds like something everybody needs to know, don't you think?
Absolutely.
Yeah.
Big game changer. And, because it's always like, it's not like, oh, is volatility ever going to come back again? It's like when volatility comes back and, being able to have the skills to trade in it and make money and not lose your shirt.
Exactly. It's 100% right. Yes, unless you get it. I mean, you guys all get it. It's so cool. And I'd almost say there are very few times that the markets aren't super volatile, right? They just, once in a while, I feel like we're coasting, but then you get it's always going to come back. It's always going to come back. Anyway, first thing that I think you need is candlesticks. It is, when you look at a candlestick chart, it really is the building blocks of the chart. The reason for it is you're seeing the emotion of the traders. That's it. You're seeing where people are wanting to buy and where they're wanting to sell a particular stock. That's how we can identify our entries and our exits real quickly. We're literally just reading emotion. So I'll show you this. Here's a chart of UNFI. So what happened, UNFI had some really neat candlestick patterns that were starting to develop that were basically the stock was slow. Then it was in a channeling pattern. And there was not a lot of buying. This is like a lack of volatility at first, where you see the stock was pretty flat. Then all of a sudden that volatility kicked up and the candles became really, you start getting bigger candle bodies. You start getting bigger clues of momentum from the candles. And you can see that it was all post earnings. They jumped up $13 per share. And there were a couple really neat turns that we saw on the candlesticks where you could see lots of momentum, and then they had a drawdown, and then you have these next big momentum pushes. And the cool thing is, when you're reading the candles, you can see the turns, and you can make money both up and down, which I think is pretty spectacular, right? Because I don't think you want to be stuck in just trading one side of the market. Trade the side that is there, but if it switches, you want to be able to trade that as well, right?
Excellent. Yes, absolutely.
So I love that. That's for sure the start. And when I was a brand new trader, after this advice that I had been given about charting, I had tons of indicators. I just cleared them all off, and I started with candles, and I got that down because, again, I think it's the most important. From there, you want to add some other indicators, and you can go as far as you want, but I don't think you want to keep it complicated. So I'm going to show you two more that I use to really help. And one of these, what it does is it gives you an idea of where the price is going to move over time, right? So you have an idea of where that stock might be going. And this is the moving averages. And it'll give you an idea of where it's going. It'll help you with your stops as well. If you feel like you get out of trades too early, these might just be the answer. So I love these. If you look at this chart of Apple, so Apple's been an interesting one because for years and years, that was my main trading stock. And then they kind of flattened out and they didn't have that volatility. Well, they've really picked back up again the last few months, and it is phenomenal. And the changes, we're starting to see these really strong patterns off of the candlestick chart. It's that volatility is coming back. Part of it is Apple is a part of this electric vehicle story. That's a part of it. But you just see the difference in the patterns. And if you look on your screen right here with that circled area.
Yeah, I see that.
Yeah, so what that is, it's an Apple coming down to a moving average, first of all. And the candles started to change shape. We went from big red candles to all of a sudden these green candles that started to take over. Green candles started getting larger, showing more momentum, and they were lifting the price up off of the moving average area. So there are a lot of things there with the candles and the moving averages that were telling us, hey, this is essentially a support, and it's a place to get in. And if you can find these and use these drawdowns, these pullbacks in these stocks, you got a stock with momentum, stock that is retracing, so you're not buying in at the highs. You get a better buy price, for your options or whether you're trading stock. You get a better price to get into the trade. And then that momentum that you can see from the candles and the moving averages generally carries that stock and that trade along with you. So you really end up just riding that momentum, and the averages will help you know when you want to get out. And, we still have strong momentum in Apple. I don't expect this to change. Next year, like I said, toward the end of January, we're going to have earnings. And that's going to continue to drive momentum into Apple and in particular some of these other tech stocks, no doubt.
That's really excellent. That brings up an interesting point too. So do you tend to trade through earnings? How do you handle earnings? That's a volatile time.
Well, it is. And it's funny. A lot of people are afraid to trade stocks or options in particular around earnings because you do get options. They get inflated. They get expensive. So I have no problem buying before earnings. And I'm talking options. I mainly will trade options. So I'll buy options before. They're expensive, but they have a tendency to hold that inflation. And we don't hold them over earnings, though. I will get out. But it means I could trade up to a day or maybe 2 or 3 days before earnings. Then I sell while the inflation is still high and in those options. And then I wait till after earnings and I let the dust settle. And then usually, sometimes it's the day after, but sometimes it's within a few days after, you'll get another good momentum signal on a lot of these stocks.
Perfect.
Yeah, so it's fun. A stock that's kind of moving with momentum and has that volatility, it'll tend to do it again. You get this really extreme stuff right around earnings. So kind of jump out of the way or hedge your trade out and then look at getting back in. So that's what I love. And honestly, these days, the post-earnings part of the trade has been my favorite. I'd say years ago, I used to love the run into earnings. Now, I actually think we get better movement after earnings. So a lot of those post-earnings trends that will last for weeks, sometimes months, right?
Yeah, I love it. And I know, Jeff, you like to trade after that earnings time too, and with the volatility. So this is a great lesson. Thank you, Mark. Hey, I'm so glad you're sharing all this. Perfect time.
Yeah.
I love Amazon after earnings. They're awesome. I mean,
yes.
They'll tank that thing or they'll rally it, and they'll always do at least 50% retracement off that thing. So the next day, I just kind of start watching and go, now they're going up. And then you just jump on them.
Yep.
I usually do like a 40-point spread on a call spread. It costs you a little bit, but still, it's awesome.
Hey, Mark, would you say that some of the things that you're looking at, that these are kind of repeatable patterns that you're watching for, so it's kind of almost even gets boring?
Well, yeah, it kind of does. There are probably about 5 different patterns I look for. That's it. And so on one hand, it does sound like it could be kind of boring, but that's good because I think in the market, we have a tendency to overcomplicate things, right? It's super easy to do it. You don't need to do it.
I like the sound of easy. That sounds very good.
Keep it as simplistic as possible. Now, there's another thing that comes up. I'll show you this real quick, and then I'll show you a couple of charts. I think it's so easy to enter, as you know, at the wrong time, right? I mean, entries and exits, right? That's what can make a big difference. But when you have a bad entry, it can first of all, it scares you. You get this emotional stress that is it's never good. It just hurt on every level of your trade. A bad entry just gets you off on the wrong foot, right? It's like you have a good entry, even if the trade doesn't work for you, it's generally okay, right? Your losses are small. You're okay. You're mentally like, okay, I know I see where I went wrong. I take my lumps and move on. A bad entry can turn that upside down, and it can turn into a bigger loss than it should, right? So this is one of the reasons that I'll always check Bollinger Bands before I do anything, before I get in or get out of anything. Now,
you're making a really excellent point, Marquette. Really excellent.
Well, good. It's just, you learn it, right? Any trader, anybody who's traded, if you don't already know this, you'll figure it out soon enough. So let us help you so that you don't have to experience it first, because we've already done this.
Oh, yeah.
Yeah. But yeah, Bollinger Bands, it may sound a little complicated. Don't worry. There's a very simplistic, straightforward way to use them. And here I have a chart of Zoom. And you can see what went on a little bit here with Zoom. We had a really strong reversal signal on Zoom. And it was kind of interesting. It's called the failed breakout. And it's in that highlighted area that you see. Zoom had been in an uptrend, and then they had this big drawdown. They rally again. So we get to that highlighted circle that you guys can see there. It starts to break out above the band, which is the upper line. Now, when it fails, that's a really bearish sign. So if you had been bullish, no matter what, you want to get out of that trade. Whether you're making money or you're break even or you're a little loss, you keep your losses small, exit that trade, and then you still have money to reverse the trade, right? Or in other words, buy a put option and take that downswing. So this is a stock that dropped over right about 27.5%. That was just a month.
Phenomenal. That's a great trade.
Yeah, and so it's things like this. When you put them all together, you can see some really powerful moves. So candlesticks, moving averages, bands. Do you guys good if I show you a couple of different charts? You can kind of get a little more experience of the three together.
Absolutely, do it.
All right, let me pause this for a second. This is where I just think everybody needs to learn a little bit and then go to the chart and practice it. All right, so what you're seeing right now, this is how I set up my charts on TradingView. And it's moving averages, and I have Bollinger Bands. That's the light blue highlight that you see in the back. And then candlestick charts. That's it. And you can see right now when we look at the spiders, we are in a period of volatility. Now, heading into next year, not sure where we're going to be, but I would watch that 471 level on the spiders. Above it, we're much more bullish. Below it, we're much more bearish. I think that's a pretty key level. We keep hitting that level and have not been able to stay above it. We gapped up, even like today, gap up, and you can see here today's charts drop below it. But as we head into next year, that's the line I'm going to be watching. Are we able to move and stay above that or not? So it's kind of a starting point. But let me show you, gosh, there's just been so many great stocks. You guys ever trade net? Just Cloudflare?
I have.
You traded net, Jeff?
I have traded.
Yeah. So.
But I was on the long side over there, not on that short side right there.
I love it. Well, what is so cool about stocks that have momentum, like momentum and volatility, if they have that there and they move well, it means they're likely going to continue to move well, right? So net is a really good example. It was a stock that trended really well when it was up, Jeff, when you were trading it, right? Super bullish run.
Yeah.
Really cool bullish candle patterns. And then when it reversed, also really great downtrending candle patterns. But I'll show you a couple. This is a long signal when we were breaking out above the moving averages. And then you can look at the candles, tons and tons of momentum, but along the way, you're going to get these pullbacks. So there were multiple entries throughout that big initial bullish swing because of how bullish the candles were. And then we get this really great pullback. That's the retirement pattern. You get another pullback to a moving average. Those moving averages are strong. They're still telling you that stock is likely to go higher. We get another big upswing, another pullback, and everything's great. And super, super bullish until it wasn't, right? Until it's not. So look at that. That candle pattern is called a tweezer top. And it's a stock that 2 times tried to push up, couldn't close at a new high. So that's a sign of weakness. It's generally a sign that the stock's going to come down a little bit. And then if you add to that kind of what I'm showing you on what we have on the spiders, look at this. The last high that Cloudflare hit in an uptrending pattern, right? So it's uptrending, it hits a high, and then it drops. All that is good. It tried again to break out to a new high, and it couldn't. So when stocks fail to make new highs, they're no longer strong uptrending stocks. They may be sideways stocks, and they may also be stocks that come down, right? So we had two really bearish signs right here at the top, and then the other sign came in with a really big bearish candle that broke all the moving averages. And that at that point, you are absolutely out of any bullish position, and with strong enough bearish signs to go in and trade that downswing. So it's things like that. And so now, so far, we've talked moving averages and candles. The bands also signaled that trade. This area up here at the top, this was also one of those failed breakouts that I showed you earlier. So the bands went bearish, the candles went bearish, and then the price graph or the moving averages were bearish. All those three pieces looking bearish, it tells us it's time to trade, I don't know, bearishly. So when I was new, before I kind of figured all this stuff out, I was a new trader. I couldn't figure out why my trades wouldn't work. I was convinced that market makers knew who I was, and that as soon as I placed a trade, they would turn it. Finally they got Marquet in. Now they're going to turn the trade, right? I'm sure you guys have never felt that.
Oh man, oh yes.
Oh, I think they had scopes and hunted me for years.
I love it. Yeah, well then, as I learned more about this, I went back. I took all my trades, my winning trades and my losing trades, and I backed it up, and it was painful. But I looked through it, and I realized, wow, the market makers may not have really known who I was, because as I look at the charts, I didn't have, I call it the stars aligned, right? I didn't have all the stars aligned. I didn't have all bullish pieces of information. I had these, maybe a little bit of bullishness, but everything else was really bearish. And I didn't know enough to know that that was something that I needed to flip the way I was trading.
Excellent. It's so excellent, Marquet, so far. Everything that you've shared has been so valuable. Thank you.
Cool. You're welcome. Let me show you one more. And then, it's just, I'll tell you this, it's just a matter of practicing this. Don't get overwhelmed. Use the roadmap software. You can use the charting, and just keep it just straightforward and simple to just a handful of things you're looking at. AbbVie. Have you done anything with this, Jeff? This is pretty cool.
That one I have actually traded myself.
Oh, AbbVie? Yeah. No, I have watched that stock, but I have not touched it.
This is an interesting one, because I feel like from my watch list, it kind of comes and goes. It's not always there, but it's been really phenomenal. And I'll show you a couple of the pieces here that made this trade setup so good. And it really comes down to the fact that we had this just slow stuff. It was slow through here and not a lot going on. And earnings caused this little upswing right here, but then it flattened out. Really not a lot going on, right? If you look behind, you can see, I'm going to clear these lines. I'll kind of outline the bands in case you can't see it really well. This is the Bollinger Band indicator. It's that blue area, that shading. Mm-hmm. So what they did is it got really, really narrow. That space between the bands is really tight. And what that means is there's just no volatility. It means like this is the most boring stock on the planet right now. Don't do anything with it most of the time. But the cool thing about something being really boring is that it means it's close to breaking out. Because the longer something is super slow and boring, the bigger the better the breakout is. It's a Wall Street saying, I'm sure you guys have all heard. The bands will help you spot that. So slow and boring, candles are small and boring. There's nothing exciting. The moving averages even, they're just kind of all going flat. Like everything is just nothing. If you spot a pattern like this, set some alerts around where the bands are, because there will be a breakout. And when you get a breakout, it's generally pretty phenomenal. Every once in a while you have a failed breakout, but that is also ends up giving us another really great signal, by the way. So failed breakouts can be cool. And this was a valid breakout, meaning it pushed above the upper band here. The band starts spreading apart. You can see that there's a space now between the bands. That happened around 117 to 120-ish. And this is just a matter of days. Right now it's already 132. That momentum signal came from the bands, the moving averages, and the candles all showing us that there was building momentum. And then once the stock took off and we got the first signal on the bands, everything else fell in line. The moving averages moved the right way, the candles moved the right way. That's your three kind of, stars aligned, right? Telling you this is a bullish entry. So it's things like that that you can put together. And I look at it like, sure, the AbbVie trade, if you didn't catch it then, okay, maybe this is not the time. But, by the time you're watching this, by next year, it may be the time again on this. But what's really important is that you learn as much as you can about the candles and the moving averages and the bands. Take that information and then take your charts and back it up. Because this is how I learned. You could paper trade so much, and that's great. That's super helpful and very, very important. However, what if you kind of retroactively paper traded, right? What if you take a stock that you say, that was so great, but I missed it? Well, back it up. Back your chart up like I just did, and just arrow key forward and just say, okay, am I seeing the signals? Why was this a bullish entry? Why did I miss it? And if you can figure that out, you'll be able to catch it the next time it rolls around. Because I promise you, this is not the last time you're going to see this. You're going to see this pattern again and again and again. And that is why I really, say I only use about 5 different patterns. It's really it. We don't need a lot.
Well, and what you just showed us is really how you can avoid getting in too late. What you were talking about, even that entry can just really kill a trader when you go in too late.
Exactly. That's exactly right. So let me jump back over here and I'll show you something kind of cool I have for you guys. So candlesticks, moving averages, and bands, to me, they have made such a gigantic difference. They really are the power horse behind the successes that I've had trading. And I do think that the traders that, you're going to be handicapped unless you're willing to jump in and take some time to learn how to use these to a certain extent. So what I did, I love this. I love teaching people how to trade better, how to sometimes it's just a little fine tuning, a little bit of a nuance that maybe you haven't quite grasped yet. But I put together a grouping of classes that you can use to learn more about these. And I have taught this I've taught 20 years. I've been teaching people how to do this, possibly more. But now I'm starting to date myself. So I'm going to start.
You're not that old.
I'm going to start saying I've been trading for 5 years.
Yeah.
I started at 17. Just like Jeff. All right. But what happens? Each of these, you get a special lesson on each of these indicators. It's over 12 hours of training. It's a great bundle. I love it. And this is something that I've charged hundreds of dollars. These individual classes used to be $500 each. So what I've done, because I think it's so important that people learn this, and I love connecting with groups like this. I know you guys. I love it. I've had a chance and fun, great opportunities for me to spend time with you. So what we've done, lowered this price to $97 per class. Also, one extra special bonus for all of the ATP people that are so awesome. What I'm going to do is put these 3 classes together in a bundle with even an extra discount. So it's just $247, which is phenomenal. And there's another thing I'm going to add to this. So what you're going to get is a class on Tuesday, January 4th at noon Eastern. We're going to have this as a live class that we can meet and hang out together. And I'll go through and after you've had all your learning, I'll go through and I will apply this to the class and I will teach you how to use those indicators even in more detail and answer all of your questions, right?
So I just want to make sure I understand. You're going to teach us all of these things that you've just been going through. We're going to learn like these 5 patterns, and we're going to have the opportunity to even do this, kind of on our own. And then we're going to meet with you for a live class right at the beginning of January.
Exactly.
That's phenomenal. You know what I love about this too, Marquet, is that the other thing that happens is you get that January effect. The first several days of the month of January, New Year, and seeing kind of where the market is and where it's settling. Because even like Jeff was saying, like that time in between the holidays where things settle down, that's going to be an amazing time. What a great way to start off 2022. On the right side, getting these patterns under your belt so you can trade what's coming, which we know is going to be a lot of volatility in the coming year. So thanks. This is great.
Yeah, I'm super excited about it. And like Jeff said, the markets, they get a little soft here at the end of the year, and the start sometimes starts off a little shaky. But there's so much money to be made, especially in the first quarter of each year. And I think it's really important that you get started the right way. So you're able, yeah, right. So you can start learning now when the market's a little bit soft, and then you can jump in and come and join me because we'll have this kickoff session for the new year, this special bonus session. I think you guys will love it. It's a great way to get extra practice and application to really make sure you're on the right track for the start of next year. And like you say, Celeste, handle all that volatility.
Absolutely.
So I want to make sure, let's see, these classes, all this stuff, I want to make sure it makes sense. You're able to apply it. So this special bonus, it's going to be for all of you guys here. What I want to do is I want to show you here, explain a little bit more, special focus on using these patterns to, it's all about managing the volatility, right? So this is what I wanted to get to. You get the recording of all three of the classes plus then the fourth bonus session. So you get all four that you are able to have and hold. You get to watch them, and I do encourage you watch them a couple of times at least until you feel really comfortable with this. But those recordings are so useful. Take a couple notes. I think you guys are going to see this is the thing that can really elevate some of your trading successes, keep your losses minimal, and help you make more money on the winning trades, right? So again, it's 4 classes, it's over 14 hours of training, and all of that stuff, just $247. It is a special deal for you guys. I've never done this before, but I love hanging out with this group. You guys have been absolutely phenomenal to me, and I appreciate it. I have such a great time.